Now, we're moving on to another really critical topic. Last week, I was fortunate enough to catch up with Andrew Dreaneen, who is Global Head of Alternatives and External Manager Solutions at Schroders. And we were also joined by Beccy Wilebore, who is Chief of Science at Natural Capital Research. We talked about the evolving role of nature as an investment category and the vital need to mobilise increased investment in natural carbon sinks as part of the net zero transition. Here's how the conversation went. System services or nature-based solutions, these are things that unless you're really in the field you wouldn't necessarily understand. Do you think that helps with investors that you have these quite clear names as to what these actually are, these projects?
I think it's a starting point. I think you have to start somewhere, and as I say, the landscape's evolving and the opportunities to invest in this asset class are definitely evolving as well. So today I think it's where people can sort of get their heads around what is sustainable forestry, trees in the ground, perhaps not purely for commercial timber, but perhaps greater consideration for what type of trees, where to plant those trees, what are the other potential considerations around biodiversity, threatened species, etc. So this is all coming into an asset class that's been around for hundreds of years, but with a new lens of sustainability. Regenerative agriculture, equally, it's important that we produce things more sustainably, getting food on the table, etc. Be sort of considerate about pesticides and try and think about minimizing nitrates and other things that go into the soils. And then protect and restore, I would say, perhaps is the one that's a little bit newer as a concept. It's one we're incredibly excited about. And it's today driven by a lot of the conservation NGOs in terms of they have boots on the ground, they're identifying these amazing projects, they're able to, through scientific analysis, through conservation expertise, pull together programs that can restore, protect against nature loss or biodiversity loss. But importantly now, with the new lens of carbon and climate finance, in other markets there is the emergence of certain other ecosystem payments like you talk about. In the UK we're about to have biodiversity net gain as a concept. In other markets there are things like water credits, mitigation banks set up, etc. So it does depend on where one sits in terms of their familiarity with the asset class. But I think those three buckets are a helpful starting place.
Yeah, absolutely. And that third one, that protect and restore, I mean, that's where the offset concept comes in, whether it's kind of biodiversity offsets, carbon offsets, and that emerging market. Presumably that's how it becomes an investment class and not just a sort of environmental protection project.
That's right, but indeed across all three types of investments, carbon is now a feature, and with that soil carbon and regenerative agriculture, whether that's removals or avoidance from deforestation or planting trees, and in the protect and restore it's about taking forests and conserving them as well as protecting against deforestation as well. So quite often it does depend on what is the concerns or what is the goal, what are the goals of the investor?
Yeah.
Are they investing for impact or actually are they a corporate that wants to decarbonize a particular supply chain? For example, produce deforestation-free cacao in a certain market. And so that may lead more into a protection type strategy, whereas if large corporates are thinking about not just going net zero, but actually net negative or carbon negative, how do they get the removals types of projects into their portfolios? And that leans back more towards afforestation and reforestation.
Yeah, I'm going to come to some of the challenges here, because obviously it is an emerging field and there's some well-documented challenges that it faces. But let's talk a bit more on the big picture side of it. Why is it so important? Why are banks and asset managers and big investors suddenly talking about nature? And what's in it for investors? Why is this attracting capital, as I say, for the first time in many cases?
So I think we have a revolution taking place in environmental investments. I do believe it comes under that broad umbrella of ESG, and in particular how do you align to particular environmental goals and thinking about contribution to nature. So that first and foremost is a, let's call it bucket or an interest that is underserved today in the market in terms of products. There are certain public equity products out there, sort of thematic equities if I can call them that, but a lot of these projects today are small in scale, operated by specialist project managers, really needing private capital to finance and long-term patient capital as well. So I think it comes under this umbrella of ESG, with the E obviously firmly in mind. But clearly one of the great things about a number of these nature-based solutions is they have multiple benefits and contribution to impact goals, including social, communities, not just climate, but biodiversity as well. So I think it actually is very broad in terms of what encapsulates for investors that want to invest beyond profit, and in particular for people and planet. I think that's really a driving force behind it.
And are we seeing it deliver attractive returns, though? Because the cynical argument from some investors is ESG is all very well and good, but I don't want to trade off on my returns. I mean, are we seeing it, deliver those long-term stable returns that investors are looking for?
So as an asset class, the forestry, sustainable forestry asset class has some returns that you can point to over the last few years. Regenerative agriculture is still quite emerging and gets caught up in the complexities of environmental bills and subsidies and as I say, soil carbon, which is something that's not readily available yet in certain jurisdictions. And then the protect and restore type strategies tend to be for those asset owners or those corporates that are thinking about climate finance and thinking about how to source carbon offsets. But as I say, I think the market will quickly evolve into what's beyond carbon and what are the other potential ecosystem services.
Yeah, so a play for the long term in some cases, in others the return's already there. And just before we get on to some of the challenges with it, I mean, how practically Schroders investing in this space? I mean, what's your pitch here to, I suppose, the companies you work with and also the kind of projects that you're potentially interested in investing in?
So I would separate between public markets and private markets here. I personally sit within Schroders Capital, which is our private markets business. And so we've been looking at what are the opportunities from a private assets perspective to invest in natural capital, and in particular in those three buckets I mentioned before. You did question around the return streams. A number of these strategies are literally in the market first time. And so one of the challenges I think for asset owners in particular to invest in some of these asset classes, in particular the protect and restore asset class, is like you say, historically it's been philanthropic money, it's been more sort of traditional climate finance, heavily funded by governments or financial development institutions and donors. And then how do you take what was reliant on that type of capital into return-seeking capital or impact-seeking capital? And I think what's different now, or what is the sort of potential inflection point, is the carbon side of these projects, as I said. And we can talk about carbon separately, but obviously there's a need from a net zero perspective to be, after decarbonising one's efforts to the best they can, thinking about what types of offsets can help them in the sort of 2030, 2040, 2050 goals. And so I think it's those requirements that help commercialise, or at least predict going forwards, what the potential return stream can be from some of these projects through the carbon sequestration or the carbon avoidance. And if you have to take what sort of price for carbon today, extrapolate that into the future, you can get a return stream from the asset class.
Yeah. Let's talk a little bit about that carbon angle, because it is so important here. It does underpin a lot of these investments. And you just get such conflicting views. You get some people saying this is going to be a huge market, it's growing rapidly, it's critical to net zero. And then you get the counter view of, is this really credible? Are these offsets, do they have the integrity that they need? Are investors getting what they want from their money? Will the market be there? Will the sort of underpinning, the legislative underpinning be there to drive the demand, etc.? I mean, what's your take on that critique of these offsets, that they're not credible enough yet, that they're not delivering the emissions gains that are advertised?
So I would say that you have to talk to experts on different methodologies to understand what are the particular baselines that are allowed, what discretion can one project developer take around the calculations that they are seeking to generate. Clearly these tend to be audited and registered and verified by experts in the field. So I would say that our view going forwards is the markets will definitely increase, both in size, also in terms of transparency, and a number of great initiatives, the Integrity Council for the Voluntary Carbon Markets. There are other standards emerging, a carbon credit quality initiatives being set up, other independent firms that seeking to provide a sort of Fitch or Moody's type rating for carbon offset projects and give corporates or asset owners greater awareness of what are the particular pitfalls or what are some of the strengths and attributes of those projects as well. So, but we are absolutely very early days, like you say, and we've spent a lot of time looking at various carbon projects out there, and it is confusing around, what is the quality, how do you measure that, what's the right price, how much longevity does that have, what's the risk of these methodologies changing, what's the risk of you as a corporate ultimately trying to do good and drive real impact into some of these communities and finance carbon sequestration or carbon avoidance projects, but with the risk that somewhere down the line that may have proven to be a project that had holes in it or that wasn't necessarily meeting or living up to its expectations. So there's a real need for greater transparency. I think there's a real need for firms to be able to provide that extensive due diligence and increase the transparency. And some of the large corporates, Microsoft and the others, producing great papers around how they view the markets and guiding other corporates around how they should think about it as well.
But you seem fairly confident it's coming, though. I mean, you mentioned the Integrity Council. That's quite a big global initiative. The standards and the governance does seem to be moving in the right direction. Is that fair to say?
It's definitely moving in the right direction. At what pace, time will tell, but the corporates need it. And if corporates are willing to finance some of these businesses that are actually being created to increase transparency, and we have seen a number of them being in funding rounds and doing really well, then I do believe that will come a lot quicker than what we think, because there's some great business models out there, great technology, geospatial analysis, ways in which you can real-time keep tabs on the projects and how they're avoiding deforestation or whatever the particular intervention is. So I think it's increasing, it's increasing quickly, but in terms of becoming sort of mainstream and like a Fitch or Moody's type rating for bonds, I think that we've still got a ways to go.
Yeah, and presumably the same applies for the regenerative agriculture and the sustainable forestry side. I mean, you said these are, forestry and agriculture are asset classes that have been around for 100 years. You put the words in front of them, that immediately requires an important level of verification. Otherwise, they will be accused of greenwash. You need to sort of validate that it really is sustainable or it really is regenerative. Again, are you seeing, how confident are you that progress is being made on that front to ensure they are what they say they are?
So again, I would say a number of the managers we spoke to in those two categories that are doing it in traditional ways, if I can call it that, or perhaps not created a specific fund targeting a specific type of environmental impact, but more trying to maximize growth of a particular commodity. They are today still doing well from a financial returns perspective, but perhaps going forwards in terms of securing new sources of financing or that move towards the impact investor, I think they will struggle. And we've definitely talked to a number, and when you ask them questions around what are they ultimately trying to achieve, in most cases it's maximize yield. And that could be at the cost of biodiversity, it could be at the cost of communities or other considerations. So it's not, sustainable it's not just lip service, it's actually asking the managers to demonstrate that. What are the frameworks that they use to measure the non-financial returns of their projects? What are the sort of methodologies out there? What assumptions are being made if there is sort of discretion within the methodologies? So I do think there's a lot of great stuff happening, but it's going to be the best as yet ahead of us, I think, as more projects kind of prove the proof statements come out for projects that are there in the market today.
Yeah, just fine. Excellent. And just finally, one other big potential challenge here that's really, I mean, it's kind of always been there, but it's really emerged in recent weeks with some of the sort of really tragic geopolitical events that we're seeing. The worry about food security is suddenly hitting headlines in a way that it hasn't previously. And that really does amplify the kind of the land use tension debate that we've already had in this space, this concern that you're potentially taking land out of productive use. Do you fear that could be a bit of a headwind for the sector, or do you think the kind of the argument for negative emissions and the potential to, I suppose, bring agricultural production into this with regenerative agriculture can alleviate that concern and that focus that we're obviously going to have on food production for the foreseeable future?
Yeah, it's absolutely key to the success of this industry going forwards. And to your point, I think those landscape opportunities that are able to blend in new afforestation projects to potentially sequester carbon, potentially it's less about maximizing biomass growth and more about having areas that communities can go and basically walk and enjoy nature for what it is. Potentially, agroforestry and other sorts of commodity type productions around there in a sustainable way, so other sort of revenue streams. It's always going to be a balancing act. And I think for any project that one looks at, those are the sorts of questions you need to bear in mind, is what are the tensions locally? What are the economics? It's not the same price to farm carbon in developed markets as it is emerging markets, or in one country versus the next. So the demands for that land for growing populations or for other uses is always going to be there. And I think it's creating projects that generally do have, I think, backing from all stakeholders, but also can be sustainable in the future. One of the issues with conservation finance is when those donations ran out, there was no more funding for the projects, and all the good that could have been done over 30 years is then undone in the future. And so I think with all of these projects, when you're looking to fund them, you want to think about, is this sustainable? What's the sort of business model? How much of those revenues go back into the local communities? Perhaps into sort of rolling those initiatives out more broadly, from small sort of 100,000 acre or hectare projects to the hundreds of thousands, and we're even seeing initiatives now talk about the millions of hectares, really sort of landscape initiatives. So that's what's really exciting about the asset class going forwards.
So at this point, we're going to bring in Beccy Wilebore, who is Chief of Science at Natural Capital Research, to talk a little bit about the detail of nature as an investment category. So Beccy, welcome.
Thank you.
So first up, for those who don't know, who are Natural Capital Research? I mean, it sounds like you kind of does what it says on the tin, I suppose.
That's it, exactly, yes. So we're a data-led, science-based organisation, and we specialise in quantifying natural capital and quantifying the services that it provides to us as a wider society.
And I've just been speaking with Andrew from Schroders about the kind of the validation challenge in this emerging space, and how you ensure that the accusations of greenwash that are still flying around the sector are answered, and that projects are credible. Can you just give us a little bit of insight as to what kind of practical work can be done on the ground to ensure the emission savings that are promised are actually delivered?
Yeah. So the key really is starting with a credible baseline. So knowing where you're starting from, that's number one. That's something that we specialise in. And the other is having outcome-based metrics. So when we're thinking about what is a project delivering, we're really measuring and observing that change and against that baseline position. So those are the two really key points. And also, in order to do that, we use a lot of Earth observation technology. So we're using satellite imagery, we're using on-the-ground data, and really quantifying what the benefits are.
And how significant is that satellite breakthrough? Because in the past, the sort of argument's been, oh, you buy an offset project from some trees and then they burn down and no one notices, or it doesn't work, and the investment doesn't have that justification. Presumably, if you're kind of watching around the clock with an eye in the sky, you can provide significantly more confidence that the trees are still there.
Yeah, exactly. So there's that monitoring part of this as well. So I think it's those three stages are really key. So what are you starting with? Have you achieved what you said you were going to achieve? And then exactly that. So you have a consistent metric through time, and you're coming back and verifying that the trees, if you like, the trees are still standing. There's also a benefit to using satellite imagery that gives you that, it reduces the error on some of these calculations as well. So you can see not just whether the trees are there, but how big are the trees? How well are they doing? And what other services are they providing?
And does this approach sort of stretch beyond, I mean, obviously tree planting is the most obvious way in which we think about these projects, but talking to Andrew again, we're talking about kind of regenerative agriculture, we're talking about sustainable forestry, we're talking about peatlands and other environments. Are you doing kind of the whole 9 yards, if you will?
We are indeed, yes. And I think that's one of the real benefits of thinking about natural capital, is that it's a holistic approach. We're thinking about nature in terms of systems. So yes, trees are the most interesting and the most topical often, but it's much broader than that. It's thinking about nature and having the right solution in the right place. Sometimes that's trees, sometimes it's peatland, sometimes it's something else.
And is the focus just on nature, or obviously we've heard one of the other big sort of critiques of this space is the tensions with land use, in developing world, tensions potentially with indigenous communities and the like. Again, is there a way of kind of providing greater assurance there that you're not having negative impacts or unexpected, unintended consequences?
Yeah, I think this is a really important point and something to consider. There's unintended consequences from a nature point of view, and you need to think about that very carefully. And as you said, then working sensitively with local communities and finding the appropriate solution in each case. So yes, it's important to have an in-country partner. And it's important to think about these things holistically. So that's really where the E and the S come together in ESG. And it's really important to think about both at the same time. If you're looking just at carbon or just at biodiversity and ignoring the social element, then the risk is really high that you're going to get that wrong.
And can you just give us an example, say, one of the projects you've worked on recently of what this looks like on the ground? Because we get a lot of talk about nature as an investment category or natural capital, and there's a bit of a disconnect really to what it actually means in terms of investments and results. I mean, what's one of your most recent projects?
So we work with a really wide variety of clients, but I guess we do two things in particular. So one is baselining what's there at the moment and then putting that into a format that can then be internalized in decision making. So to give that a bit of color, we work a lot with water companies, for example, and utilities. So an example in the UK, we're working in Scotland, and we're looking at how do we, at a national scale, look at a portfolio of assets that might be scattered across the country and have a consistent view of what's there now, how is nature doing, and then opportunities. So if you had a set pot of money and you wanted to provide impact of climate mitigation and biodiversity improvement, where would you put that money to get the biggest bang for your buck? So we can do that at national scales and international scales to give you that really consistent view of where should I be targeting my efforts. So utilities is a really good example of that because that's a kind of catchment-based, very broad scale approach.
And then you presumably pick the best locations for tree planting or peatland restoration and make sure they're getting that bang for their buck, if you will.
Exactly. So there's two benefits to that, really. I think one is that you're looking at a landscape scale, so you're having a very joined up approach to nature, which means that you can get bigger benefits. And it also means that you're just being more efficient with your money. So as an investment opportunity, you know that you're getting the best value.
And Andrew, just bring you in here. I mean, Beccy mentioned it as an investment opportunity. I mean, for your clients, for the people who are sort of giving you money to manage, how important is this kind of research, this kind of validation, to show that you have got a reliable baseline and you are tracking progress over time?
That's absolutely critical. We were talking a moment ago about the voluntary carbon offsets and potential scrutiny over what baselines are used and how many trees are actually being planted or how much forests are being avoided against deforestation, etc. So it's key to have the methodologies robust, recognise international standards, etc. Absolutely key to have partners like we do with Natural Capital Research to be able to do that design work, the identification of where the biodiversity hotspots are, what trees to plant where, and then to, as Beccy said, monitor that through time because I think too much is done at the moment periodically every 5 years, and actually a lot can happen in a 5-year period.
Yeah, absolutely. Beccy, we were mentioning previously about that kind of the standards that are emerging in the carbon market space. I mean, how much are they informing your work? Because it's fair to say at the moment, there's lots of different methodologies used to do the type of work that you do, and some would argue some are better than others in many ways. Do you welcome a kind of hopefully more standardised, more rigorous approach for everyone?
Definitely. I think we're seeing at the moment and over the next couple of years a real flourishing of standards, I think, particularly around carbon, but also around biodiversity and other elements of nature. And it's a fantastic thing. I think we always test the rigor of those standards and we like to lead from the front as well. So if we can be more rigorous than the standard, we will be, always showing sort of what good could look like. But the benefits of these standards is that they bring up the quality of projects and making sure that there is no greenwashing. So we're seeing the development of soil carbon, for example, and soil standards. We've got salt marsh codes and marine carbon codes coming through, lots of agroforestry and agricultural codes. So it's an exciting time to see not just, as you said, trees, but also other potential solutions as well.
Fascinating to hear that the standards are getting out ahead of those emerging new categories as well. Just finally, a question I'm going to put to both of you, because is there in your company's title, Beccy, Natural Capital. There are some within the environmental movement who really don't like that term, who don't like the idea of monetising nature, if you will, or trying to put a price on nature, given it is priceless. And in some ways that strikes as a valid critique. I mean, what's your response to those concerns that while this whole idea of investing in nature is well-intentioned, there's a real risk here that we do end up monetising nature, enabling its destruction potentially if we don't put the right price on it, and that we're not going to deliver the gains that we want to see?
And I have a lot of sympathy with that. I think I'm an environmental scientist by background, and I think I would have been in their camp at some point as well. But I don't think you necessarily have to value all of nature in order to take a natural capital approach. The idea of natural capital is really just a sort of accountant's view of nature, if you like. We think about assets, your trees, your salt marsh, your kelp, and then managing those assets responsibly in perpetuity to provide us all the services that we need as humans to live on planet Earth. And valuing that can be really useful, but it's not essential. So from the purpose of biodiversity, for example, you as an organization or as an investor, you can set KPIs around biodiversity and show an improvement of biodiversity through time. And the value of that is really just about how much does it cost you to deliver that KPI. It doesn't necessarily have to have a market value in and of itself. So I think, yes, it's important to put a price on some of these things, but it's really what gets things done, and at the end of the day, the outcome should be an improvement in nature.
Yeah.
And if we achieve that, then I'm happy with the means.
No, it's interesting. That's the point that's often been made, isn't it? That if you have no price on nature, then there's even more risk of it being despoiled. Andrew, I'm just going to wrap up by putting that same question to you. Obviously, you work in the financial space, Schroders, massive asset manager. Some of our viewers would look at it and say, the financial industry is looking to monetize and make money out of nature rather than trying to protect it. What's your response to that critique?
Well, there may be some out there that are taking that very sort of opportunistic view. I generally think, however, there are others out there that are trying to do right for people and planet and design thoughtfully investment products that can help individual investors all the way through to large institutions to align their sustainability preferences into investments. And nature just has this amazing power to sequester and store carbon, to clean water and our airways, to prevent against flood mitigation or flood risk, and other powerful aspects. Importantly, help us put healthy food on the table. So I think it's right that it's time to bring in new valuations for some of these ecosystem services. I think it's overdue in many cases. Carbon's clearly at the forefront, but as Beccy said, there's many others coming into the market, and I think we're going to see a huge growth. There's $100 trillion owned and managed, by asset managers. If just a tiny fraction, let's say 2.5% of that could go into nature, it would make the world an amazing place. And that's about the size of the funding gap we see in conservation, actually, and alignment to SDGs is around $2.5 trillion. So unless we can demonstrate to investors there's a financial return, and that return can vary quite considerably. There are investors out there looking for a very low, modest, if at all, return, and there's others looking for sort of 6 to 8%. And we are seeing investment products emerge that are positive for nature, society, and can deliver that sort of return stream. So it's really exciting. Yeah, indeed. I suppose the most compelling argument for this is that the current approach obviously isn't working. There does need to be change. There needs to be reform, and this is potentially a way of mobilising those billions of dollars of investment we need. Excellent. Huge thanks to Beccy Wilebore from Natural Capital Research, and also Andrew Dreaneen from Schroders. And now it's back to the studio.